Hey everyone, this is Alec with Optionality. Hope you're having a good week so far. It's Friday morning, and I just wanted to go over the Silicon Valley Bank stuff that's been going on the last few days, has been dominating headlines, and is probably the story of 2023. So I just want to go over how we got here, what happened, and what potentially the outcomes are moving forward. So 2021, we saw a huge influx of venture capital coming into the startup industry, and mostly with tech startups. And those startups were pairing with Silicon Valley Bank. And I think Silicon Valley Bank is the largest bank for tech startups in the world, probably. So their deposits increased almost threefold from the end of 2019 to the end of 2021. And they had to earn some type of interest on that cash because deposits on a bank's balance sheet actually represent a liability because they owe those deposits back to whoever the depositor is. And so in order to earn a yield on that, they invested $80 billion of that, a huge amount, in mortgage-backed securities. Now these were safer mortgage-backed securities backed by the government, but still some risk to them. And at the time, they were yielding 1.5%. Because again, 2021, that was the super low interest rate environment. So fast forward to 2022 and today, the Fed's been steadily increasing interest rates. And so the mark to market of that mortgage-backed security portfolio that Silicon Valley Bank owned sharply decreased. Now this wasn't a problem because Silicon Valley Bank intended to hold those securities to expiration and held them to maturity. And so what that means is that they still would earn the 1.5% on those funds and ultimately be able to pay back the depositors and earn the yield that they needed. So it wasn't really a problem until they started seeing a lot less deposit activity and a lot more withdrawal activity because the venture capital landscape has pretty much frozen over the past 6 months. To cover that activity, they needed to actually liquidate that mortgage-backed security portfolio, which caused huge losses, again, because the value of it had been going down against a rising interest rate environment. So that leaves us to today. Silicon Valley Bank recognized a $2 billion loss 2 days ago, and they were trying to raise capital to cover that loss. There had also been whispers of potential liquidity and solvency issues if deposits and withdrawal activity sped up to what they had been doing. So now, as of this morning, we know that Silicon Valley Bank tried to do a capital raise and it looks like they failed. The stock is currently pending, so we don't know if there's a buyout coming or if potentially they did end up raising capital, but this is definitely a situation to keep an eye on. I want to say thank you for tuning in and definitely have a great weekend. Thanks.